Happy New Year. As we finish this holiday season, it's now back to the grind. Every year around this time, there's a great government agency who's always waiting to hear from us, whether we want to hear from them or not. Yes, to some of us, we're happy to hear back from them quickly. And for others, well, we know they're great people just trying to do their jobs, but let's just say we're less enthusiastic about getting that certified letter in the mail. Here at Always Real Talk, we bring in the top tax experts to go over the do's and don'ts, as well as to give advice on the new tax laws passed by Congress. Beverly Winstead is the founder and managing partner of the law firm Beverly Winstead, LLC, specializing in tax resolution for those of us who receive that certified letter in the mail, along with estate planning, sports, and entertainment law. She also teaches tax law as a professor at the University of Maryland. She is the first woman of color to serve as chair of Maryland State Bars Association Tax Section. She also was inducted into the Basketball Hall of Fame in 2015 at Bowie State University. She has been on, let's say, 3 CIAA Women's Championship basketball teams, and she's also received a 40 Under 40 award in the United States National Bar Association in 2018. I am glad to have in the studio with us today Beverly Winstead. Well, Beverly, welcome to Always Real Talk. It's good to have you in the studio with us.
Thank you so much for having me. I know we talked about me coming down here for, some time, so it's great to have the opportunity to finally get down here and see you, Kwame.
What are the top couple of issues that you see that's taking place now during tax season?
Okay, well, first of all, I want everybody to know that tax season officially opens January 27th.
Have you started to get calls already regarding this tax season?
Oh, absolutely. So I think the confusion, not only in addition to the government shutdown,
right.
Remember one of the things that President Trump was touting was that he was going to save Americans money.
People were saying they filed their taxes thinking that, there's a possibility that it should be structured this way, and then it was different. Is that what kind of happened? It was a lot of confusion last year. People are talking
Upset.
They're talking about it right now. They're
yeah.
like, hey, how did I owe money? I never owed money before. Now I owe money. Was it the new tax law supposed to be saving money? Have you found from your clients, in most part, are people, paying less or paying more to the IRS than they were previously before this law was passed?
Well, I'll say, it definitely depends. One of the advantages of working with a tax advisor is people.
It's interesting because I had someone on the show and they were saying that it was, I guess, in December, and they need to go spend some money, right?
Mm-hmm.
So they needed to go buy equipment, they needed to go buy vehicles for their business, they needed to go buy things to get that money out there to be spent on their business so they don't have the tax liability. Of course, as 2018 came to a close. Now, you've been doing this for a while. You're one of the best that's out there. What advice would you give an individual that is thinking about being the S Corp come 2019 or being an LLC? Because everyone's creating these LLCs. They're not clear what the laws are saying, especially the new laws regarding the LLCs. What advice would you give some business owners that are soon to be entrepreneurs that's about to get in the line of business? Because they always get caught at the end of the year not understanding that.
All right, so we're in 2020, right?
2020.
And as we go to 2020, I think a lot of people are really focused on trying to get their life in order, and finances impact a lot of people's life choices and their ability to actually live a happy life.
That if you're out there, you need to get a tax advisor early. People start their business and they say, I'm gonna be an entrepreneur, I'm gonna bake cupcakes, I'm gonna start this, I'm gonna do that, and then people give you all the bad advice of what you can write off and what you can't write off. Am I right?
Right.
And then you file, and the first year you say, oh, this was great, and then you do it again, make the same, you do what you think you did right the first time, the second year, and it's great. And the third year you come by, next thing you know, it's what? An IRS audit. And then they end up calling experts like yourself to try to help them figure out what they did wrong.
Right, which brings, you just made a good point, because in most instances, we don't know that IRS actually has 3 years to audit your return. Well, first of all, it's critical to keep records, and it's critical to have a system to keep records. You raised an interesting point where
you can hire your kids.
You can hire your kids.
Now,
right?
how much? Okay,
So a
walk
lot of
us through
times,
this, kids. I know I got people with kids, and they're gonna be calling us and texting us. They're probably gonna be. They might do it right now. Say, hey, I can hire my kids. What does that mean? Walk us through how you could legally hire your kids.
well, this is part of why I'm such an advocate for having a business is because you can do a lot more strategizing when you have a business than when you're just a W-2 employee. Now, even if you are a W-2 employee, I think it's still good to kind of have probably a business on the side, right? You have to have the money in order to do that, right?
No.
You got to make the money, right?
Okay, but let's walk through that.
Okay.
Now you have hey, you guys are getting free advice here today. Yeah, she's an expert. She gets paid for this stuff, but it's always real talk, so we're gonna keep it real.
Right.
If I have 2 children, and I can pay them up to $12,000, and say one's 14, do they have to be 18 years old or older, or can they be 14? Can they be 10? Can they be what ages? Do
So
they have
you
to
can
be?
actually pay them. So anytime when you're talking about kids, the IRS is going to look to see whether or not it's a reasonable compensation. That's a lot of what they do when people are business owners. Even you as an owner, let's say of an S Corp or a C Corp, IRS wants to see that whatever your job description is, it matches your pay scale.
Right. No,
So
for
that's the
example,
first thing you're going to
say
look
you have
at.
a 16-year-old kid,
Right.
or 15-year-old, 14 or 13-year-old, and you pay them, $500 a month to come to your office, because it's per month. There's 31 days in a month, so that's pretty reasonable. Then they come part-time and they're filing, or maybe they are in the vehicle with you doing some outside work.
Right.
And you're paying them, I don't know, $30 an hour or $20 an hour, whatever you pay them, then that's a legitimate.
Is it legitimate
Write-off.
expense? Right.
Or we have kids that are, social media savvy.
This is what I said.
So I want to go back to that, right? Because we got people, like my daughter, Raggedy Royal, give her a plug, Raggedy Royal Instagram. She has 66,000 followers, right?
Wow.
So she's an expert at what she does, right? And in order to get that type of that service, you're going to pay, $5,000-$10,000 a month for that.
Right.
So is that something that could be considered a write-off? I mean not a write-off, but I'm paying her.
So let me give you an example. I was meeting with a client, and she had just started a business, and she came in for a consultation, and she was just sharing with me how she was really having problems with cash flow. She also was a single mother, and her son was in college, and she was giving him a monthly allowance of like $500 a month, an allowance which is not deductible. Why don't you hire him as an employee to be your marketing person, and then what you will do is you'll actually shift at least $12,000 to him. You can pay him more, but $12,000 is just the cap so that he doesn't have to file a tax return. Right.
Right. So that's I didn't mean to ever interrupt you, but I had to stop real quick because this is a great segment. You can pay your child that actually does the quality work, and we all know these social media savvies. They got it. They got it.
Yeah.
Right? And they're worth $12,000 a year,
Right.
easy, right? To be able to pay, and they can be 14, 15, 16 because they just have to be able to do the work, right? Now, as long as they do the work, they get paid. Now, if they're 14 or 13 and they do not have because you can't get a bank account at 13 or 14. How does that work?
So I'm not familiar that they can't get a bank account.
Oh, can they?
Okay.
I didn't know. Can you? Well, I guess you have to be on like.
Maybe
your
it's a
parents or something like that.
UTMA account. What's that? A custodial account.
A custodial account.
Yeah,
Okay.
you probably. I mean, I know you could. I definitely know you can set up a custodial account, but you just want to treat it just like you treat any other employee, right? If you're paying them, then they should be on payroll.
Yeah, I'm just saying, how does that work? If I'm paying my child, and I'm writing them a check to their name, and then they take that check and they put it into an account.
Right.
Right. And if it's a custodial account, anyway, they can figure it out. Talk to
the bank, because the only
figure it out.
Right from
how to do it.
a lot of times we look at this from the tax perspective and the legal perspective. The law
Which
says
is
that you
important.
can hire your child. The tax law shows how advantageous it is. So anybody that has a business is absolutely, a lot of the things that we talk about when we strategize with clients. So.
And the good thing is just make sure you keep good records.
Keep good records.
Good records.
I mean, it really is.
What you call it. So, well, hey, I did this, and I nope. Keep good records. get a great tax attorney that can walk you through the process. You see her information is on the screen. Her number's on the screen. You can always, give her a call, send her email.
But just in that example, go back to that. Just in that example, right then and there, she lowered her taxable income by $12,000, right? She always had it. She just didn't know how to structure it correctly.
She didn't know how to structure it correctly. Well, that's a great tip right there. I mean, I think you just gave our audience and our listeners just a great nugget. I didn't know it was 12,000. I thought it was 5 or 4. I wasn't sure what it was. So that was a great
prior to the new
me.
tax law, it was probably about maybe about 4,000, a little under $5,000. So you're correct. But when the 2017 Tax Cuts and Jobs Act hit, then that was one of the changes that was made.
Well, I'll tell you what. We'll be right back. We're going to talk a little bit about that 2017 Tax Law and Jobs Act. We're going to go a little bit more detail. We're here with the one and only Beverly Winstead. Hey, one of the best tax attorneys out there in the region. See her name on the screen. We'll be right back. It's always Real Talk. Welcome back. We're here with the one and only Beverly Winstead, and she is one of the top tax attorneys in the region. Now, Beverly, we wanted to talk about the Tax Cut and Jobs Act that was passed at the end of 2017. And I just wanted to get, what are some of the provisions in that impact individuals and business owners?
Okay, so let's just start with individuals. One of the main things that impacted, in particular, people in this Washington, D.C. area were real estate taxes. Then you're only allowed to take $10,000.
And how about the businesses?
Businesses, the business rates changed. You had the higher tax rate. Now, the lower tax rate, C Corps are something that we are really kind of, if it makes sense to push a client toward a C Corp, then it's something that I'm certainly going to say, hey, you should be a C Corp, or you should be a LLC taxed as a C Corp. And not only do we look at the fact that it's a lower tax rate, the other thing we're going to look at is whether or not you really have the cash flow to be a C Corp. So it's not as easy as, hey, if somebody is listening to this, oh, Attorney Winstead says be a C Corp. No, there's still other factors that we go into, and based upon the other factors, we make the recommendation to be a C Corp.
So one thing about it is, if in fact we have listeners that are out there and you're thinking about a C Corp, or you're thinking about S Corp, and you just heard what you said, first thing you need to do is pick up the phone, and you need to give Beverly Winstead a call so she can properly analyze your current situation to make sure they see what actually fits what's best for you. Is that right?
Right, absolutely.
So always do that. So don't be jumping and say, oh, I heard we should do this. Always real talk. So
I always say that. That's the legal disclaimer as an attorney. This is general advice, right?
So you can get some good nuggets, but to make sure it's proper, because some things could work, some things can't work. I know in the past, people are saying stay away from the C Corp. Now people are saying depends on how you're structured, what you're doing, what your revenue is. It might be, it
might be the right decision for you to be a C Corp. So that's how the Tax Cuts and Jobs Act changed for the C Corp. When it comes down to the flow-through entities meaning about that is that, and this is just generally speaking, that now you get a 20% deduction. You may qualify for a 20% deduction.
Versus before?
Before, all your income had to be reported.
Right.
So it's called qualified business income, right? And so if you're typically in some type of consulting business, you should be able to get an additional 20% off of whatever your income is as the deduction.
As a deduction. Now, there's new leadership at the IRS. I know you pay attention to that. Some people pay attention, some people don't, until, of course, they say, well, why do I got to pay so much? Then they're mad at the leadership. Well, give me your thoughts on the new leadership that we currently have there at the IRS. And do you see a big change in terms of how they will operate internally from this leadership?
So I'll say this. I've met Commissioner Reddick a couple of times. The Bible says that our people perish because of a lack of knowledge, right? And so one of the things that I encourage people is that now it's not the time to sit back and wait. Now is the time to really be proactive, because IRS has already said that they are going to be about enforcement. So what does enforcement look like, right?
Yeah, what is enforcement? Because I know a lot of people that have gone through audits. More people I know have been through audits over the last, 2-3 years especially last year.
Right.
So is that, and this is
That's
once
part
again,
of enforcement.
this is a part of
That's
the
part of
directions
enforcement.
of what the IRS is looking for. So I'm going to advise folks, if you have a business, if you don't have a business, you don't have a tax advisor, give Beverly a call, because we really should have, and if it's not Beverly, it should be someone. You
Right.
should be sitting down talking to someone. We already heard, right? We've already heard enforcement is the issue.
Right.
Right? That's the policy. We're going to be enforcing stuff.
It's enforcing stuff. So enforcement means that IRS is looking to see whether or not you're properly reporting your income and your deductions. If not, then they're going to pull your return for an audit. The other, a lot of people don't do things because they feel overwhelmed because they've let the situation go on for too long. But a lot of times, if you come in and you talk to someone, and someone who actually has the expertise, then, it may not be as bad as what you think.
But the objective is to sit down and talk to someone.
Yeah, to sit down and talk.
Right? If you get behind, you haven't filed, talk to someone, because we just heard enforcement is one of the key. They've hired more revenue officers, right? Which means they're coming to get your money. Your money, they're coming to get it. And they got a lot more people they hired to come get it. So you need to sit down and talk to someone that's going to give you some advice, the best advice, to kind of help you deal with this situation. Because, as we say, it's cloudy outside, and you knew it was cloudy, and you didn't bring an umbrella, and they told you it was going to rain. Well, it's going to rain. If you haven't filed your taxes, if you owe the IRS, I think you kind of laid it out there on the line. So let me ask you a question. Everyone's talking about this new policy, this new tax law that's taking place. In your dealings with your clients, has this been something that's been beneficial to people, or is this something that is really costing the average taxpayer more money?
Okay, so I have you said average taxpayer, right? Because I have a wide array of clients. Okay, so the higher income earners, sometimes if they don't have kids, because I think when we talk about this was the bill, when Congress touts that this was the bill for the middle class, it was the bill for middle class that had children. Okay. Because in the past, prior to the 2017 tax law, if you were capped and couldn't claim certain deductions like the child tax credit, if your income was $110,000 or less, like a lot of people in this area, if you make that kind of money, particularly if you're in a 2-income household, then chances are you're definitely over the 110 threshold.
You think the new tax law has actually worked out well?
I think in some areas, but it goes back to if you're a working class family and you pay real estate taxes and have a large amount of state taxes being withheld from your W-2, then you're still capped at the $10,000, which you can claim as a deduction. The credit definitely is the better deduction. It gives you more bang for your buck than just a deduction. So I think people that definitely have families are experiencing some of the advantages of the new tax law. But if you are a high income earner and
single,
with no kids, people get slammed.
Because I keep hearing that the only people that are benefiting from the tax law are people that are just super rich, and the rich are benefiting, and working class families are not benefiting. That's what you kind of hear, depending on what station you're looking at, or what news channel, media outlets out there.
Well, they're benefiting because they have the C corps.
But
they have the businesses and they have the C corps. Right.
But what you're saying is that if in fact you have a C corp, you're benefiting because you got a C corp. Mm-hmm. If you are a working class family, you're benefiting because you got a family and you got deductions, right?
Right.
The people that aren't benefiting are those, high earners that don't have any kids and family that's not a C corp.
Right.
That's it gets confusing on the message, and because you deal with this every day, because you're the expert, because you're one of the best tax experts in the city and in the region, I wanted to hear directly from you. Thank you for laying that out for us. Yeah.
So, in my opinion, the tax bill is actually a rush job, right?
Right.
And IRS said, absolutely not. There's no workaround. I know New York, I think, was one of the states that said, okay, look, we're going to let you donate to a charitable fund, and then you take the charitable fund and you're going to take it as a tax deduction on your tax return. And IRS is like, oh, absolutely not. You know, so they're letting people know we are about enforcement and we're going to look at this and you're going to get audited. So you may as well not even promote this to the residents of your state. And the state backed off.
Now,
right?
This is the third time you said the IRS has said that we are about
enforcement.
And I just want to stress that to our listeners and to our viewers out there. That
not only the civil division, but IRS has.
Again, find great representation. Find people you can talk to if, in fact, you know you may be in that category.
When we talk about it may not be as serious as what people think, so they shouldn't be afraid. They should just probably come on in and talk to someone. I had a situation I know where a client, actually IRS had levied about $40,000 out of her bank account. I would say probably about 6 months, so we got it sorted back. She did get her $40,000 back from IRS.
Okay, she's got her money back.
Yeah, but when she came, and the reason why I say you shouldn't fear it, because even though you don't understand the tax law, you want to work with somebody that does understand the tax law. Because whereas, like, you know, IRS was saying that she owed $200,000, I'm like, no, she doesn't.
Right, and that's, once again, that's why it's important to reach out, get a tax expert, get a tax attorney, get someone that can help you, even if, in fact, you know, you feel squeezed, you didn't do what you're supposed to do. Reach out, because you never know, you know, what can transpire. She's $40,000 back to her account. She's probably able to sleep better at night.
Right.
And all because of something that she just didn't realize that
she didn't realize. And at that time, and this is why I say, like, you know, when you come to me, like, I'm not going to judge you for not filing her tax return. You know,
Beverly Winstead, hey, expert tax attorney.